death tax working under IHT. Okay, so let's go back to the notes and let's understand death tax in case of IHT. First, what are we doing in death tax and what is the applicability here? Death tax would simply means that all these lifetime transfers, right, that we just took in so many examples also. So the lifetime transfers that take place throughout the lifetime while the person is alive, you just have to see that from the date of gift, let's say there were 10 gifts made. So from each date of gift, please see if within 7 years after the date of gift, if the person dies, then in that case, that particular gift will also have, we will also have to calculate death tax on the same. It will not lead to double taxation. We will just have some additional tax to be calculated. So what are the steps that we follow in death tax? Please look here. Steps. Number 1, calculate GCT during lifetime tax calculation of lifetime transfers, because we will require GCT when they become subsequently taxable under and on death tax, then we need to reduce the GCT of the NRB. Okay, now step 2, check the gifts. This is just a summary I'm giving so that you will never ever forget death tax. Simplified steps. Check the gifts. I will not write gift. I think let me be more clear. Check the lifetime transfers. Check the lifetime transfers, both PET and CLT. So here there is no differentiation because PET can also become taxable. Hence we call it as potentially exempt transfers, because although these transfers are exempt while we calculate lifetime tax, but they have a potential to be taxable when we calculate death tax. Okay, so both PETs and CLTs, check the lifetime transfers, both PETs and CLTs. If falling, yes, we can write that also. If falling within 7 years prior to the date of death. So either you see from the date of gift within 7 years is the death falling, or you go back, because from date of gift you will take forward 7 years. But from date of death you will take backward 7 years and see in the previous 7 years what all gifts are falling in that period. Once you check the gifts that are falling in the 7 years period, from before the date of death, then those gifts are going to be taxable upon death. Okay, or in a very simplified way we can also take it turn around. Check for every gift in the next 7 years, is the date of death falling or not. If it is falling, then boss, that gift is taxable upon death and you need to calculate death tax on the same as well. How would you calculate death tax? Now you will start with GCT. Okay, so we'll start with GCT to calculate death tax of chargeable PETs. Now why I call it as chargeable PETs? Because the moment these PETs they fall in this 7-year period, now they become chargeable. You will have to calculate death tax on it. Of chargeable PETs, and I'm not writing chargeable CLTs because CLT only means it's a chargeable transfer. Got it? And then while calculating NRB, while calculating NRB, reduce it by all chargeable transfers GCT. Which all chargeable transfers? Chargeable PETs and CLTs falling, same rule of NRB now, within 7 years prior to the date of gift. Date of gift only you will take, just like normal NRB, and whatever, and we reduce NRB, right? So till now we have been always reducing the GCT of CLTs because PETs were always exempt during lifetime tax. But now PETs can also become chargeable. So only the PETs that have become chargeable. And which PETs become chargeable? The ones that fall in 7 years period. Okay, 7 years period, the ones from which 7 years when we take date of death is falling, or reverse, from the date of death you take the last 7 years and these PETs are falling in those 7-year period. Only those PETs are chargeable. That means, ma'am, the PETs which are not falling in the 7-year period, they are permanently exempt. They will never be taxable. So when we reduce NRB, we will never reduce exempt PETs. We will always reduce the GCT of chargeable PETs. That's the catch. And falling within 7 years prior to the date of gift. Clear? Next, once you do this, okay, we calculate death IHT. Oh, I'm sorry, the space has reduced. No worries, I will write here. Then calculate debt IHT, and debt IHT is simple, at the rate 40%. The question is, ma'am, who will pay the debt IHT? Boss, donor has died. How can he pay? The donee who's receiving the asset, or the donee, to whom the asset was transferred, that donee will bear it. Logical, right? So calculate debt IHT at the rate 40% and reduce taper relief, that I will tell you what is it, and IHT already paid under lifetime tax. That was a CLT. Okay, so let me just crisply, in a summary, I will give these steps. That was a detailed one. Step 1, GCT of lifetime transfers, because that is your starting point. Number 2, take date of gift if in the next 7 years date of death falls I can write within. Date of death falls, then all PET, then it will become chargeable on death. Okay, both PETs and CLTs. Don't forget that. Third, calculate chargeable transfer of value. That is our starting point, although I will not write. Calculate NRB. While you calculate NRB, tips. Number 1, okay, tip is reduce GCT of only chargeable PETs and CLTs in last 7 years, falling in last 7 years. Falling in last 7 years prior to the date of, what do we take for NRB? Gift. Okay, so don't forget that you have to take it in the last 7 years prior to the date of gift. Very important. Even if it is death, we take the date of gift only. For lifetime transfers, always for NRV deduction, we take date of gift. Okay, fourth is, once you have done this, then calculate taxable value, calculate debt IHT at the rate 40%, reduce from it taper relief. I will tell you what is it. And lifetime tax paid, if any, on CLT transfers. Because we don't pay lifetime tax on PT transfers. So this is the summary steps, guys. Just keep hold of it and you will never, ever, ever, ever forget anything. Clear? We are clear with lifetime tax. Now we are clear with death tax also. Comes the point, ma'am, what is taper relief? I'll explain you here. Then I'll do a question where I'll do both lifetime tax and death tax, so that we are absolutely crystal clear with this concept. Okay? Okay. So now please look here. I will show you in the book. I have already inserted it. The table. Okay, can you see this table? This is your taper relief. Now, what is taper relief? Taper relief is nothing but a relief which is given based on the period between the date of gift and date of death. Let's say the date of gift is on 6th October 2020. Date of death is 7th November 2024. 6th October 2020, 7th November 24, it is beyond 4 years, till 5 years. So you will see, if the period is between 4 to 5 years, 40% of IHT will be reduced. So the IHT that you calculated, for example, is just 10,000, you will reduce by 40% of it, that means 4,000. So you will have net pay IHT of only 6,000. Clear? So taper relief is the reduction in the IHT which is payable to HMRC. Now, so just understand, this table will be given to you on your exam. No need to learn it. Okay. Now, the period taper relief is only available if the period between the date of gift to date of death is minimum 3 years, and it is available till maximum 7 years, because you know that we always take the 7-year period only. So 3 to 7 years is the period between a date of gift to date of death. Then based upon the period 3 to 4 years or 4 to 5 years, 5 to 6 years or 6 to 7 years, you will get a relief. Minimum percentage reduction is 20%, the maximum is 80%, not beyond it. And if the period between the date of gift and date of death is less than 3 years, no taper relief is there. Once you reduce taper relief, then we will reduce any IHT paid in donor's lifetime, which is only on CLT transfers. On PET transfers that have become chargeable, no reduction will be made, because we never paid lifetime tax there. Clear? I think with this now, it's good time that we do questions. So let's do questions to have thorough understanding. So I will take up a question where we have lifetime tax as well as death tax. Post which we will take the last part, that is the tax on death estate. Okay, this one would be homework. I am doing question number 9. It looks like a small question. It's a very good question. There is a PET transfer as well as CLT transfer. So I think both concepts will be clear. Mr. Raymond made the following gifts during his lifetime. 13th May 2019, gift to daughter, and 23rd August 19, gift to the trust. This is the transfer of value. You need GCT. He died on 7th June 24. Calculate any IHT payable during life. That also we have to calculate. And on death. The NRB for 1920 was 3,25,000. So we are keeping the same NRB. Okay, let's start doing for Mr. Raymond. Question number 9. Okay, now first we will calculate lifetime tax. List down both the gifts. First gift is on 13th May 19, then 23rd August 19. PET and CLT in values 130 and 334. This is also tax year 1920. Okay, and this is a PET transfer and this is a CLT transfer, right? TOV transfer of value here is 1 lakh 30 and 3 lakh 34,000. Okay, now I will reduce annual exemption. Same steps. Current year, previous year, we do it on a FIFA basis. First, you have a PET transfer, so first I'll reduce from it. There is no other transfer, so previous year is also available. Here I will reduce 3,000. Here I will reduce 3,000. Okay, and here nothing will be reduced. So you get chargeable transfer of value. Here it will be 130 minus 6, 1,24,000. The same will be GCT. And here it is 3,34,000. Less NRB. So there is no chargeable transfer before this trust transfer. PET is exempt transfer during lifetime. Correct? So here we will not reduce anything, and here full 3,25,000 will be available. Once you do this, then you get taxable value. Here no taxable value, and here you will have 3,34,000 less 3,25,000, which is 9,000. What is the question saying? Who bonds the tax? Nothing is given, so the donor will bond it, right? So tax will be borne by donor. Right? If the tax will be borne by donor, so then IHT will be at the rate 25%. Here IHT will be 2250, right? And when you calculate, and it is by donor, you need GCT now, because for the death tax I need GCT. GCT here will be same 1,24,000, and here you'll have to add IHT, remember? So GCT will be 3,34,000 because we take the figures before NRB, before application of NRB. 334 plus 2250. So it is 336,250. GCT is 336,250. Now I can calculate death tax. Let's calculate death tax. Remember, this IHT paid also here. So B part is calculation of death tax. When you calculate death tax, the first step is to write date of death and then 7-year period before the date of death. Because this is the fixed period. This is the fixed period only that you have to follow. Okay. This is the fixed period. So date of death here is 7th June 24. Okay. So the fixed period will be starting from, let's say, 8th June 2017. See, one hint for you, your periods will always start from either 17 or 18 because your tax rate is 24, 25. So when the date of death is in 24, your period will start in 17. If your date of death comes in 25 till 5th April 25, then your period will start from 18. Okay, just remember 7 years is that. So it is 7th June 24. Clear? This will help you to remember. Now please see if what is the date of gifts here, because the gifts that fall in this 7-year period will become chargeable on death. First gift is 13th May 19, which is falling in this period. Second gift is 23rd August 19, that is also falling in this period. That means now this PET is no longer exempt, it is chargeable upon death. Okay, so again you will do the same working, same sequence. Like you will write the date of gift, but you will not write tax year because we are calculating death tax in tax year 24, 25 only. So that tax area is not needed. You can even skip writing PT transfer because no longer this differentiation is needed. However, we can still write it, right? So I will write it here. 13th May 2019 and 23rd August 2019. Okay, so I will start with, this is a PT, this is a CLT, done. Now I will start with GCT only. So here my GCT was 1 through 24 and here 336, 250. And please remember, this PT is chargeable. It is not exempt, because if the PT did not fall in this 7 years, then it was exempt, and NRB will also not be reduced by exempt PTs. Correct? We already know that it is reduced by chargeable PTs. Now I will reduce NRB. This is the first transfer. There is nothing to be reduced, so we will reduce full 3,24,000, and you can see it is fully covered here. So I will not reduce full amount. I will reduce negative 124 because we cannot have a negative value. So taxable value here will be 0. Now here when I take NRB, I will reduce 3,25,000. From this I will reduce GCT of the chargeable transfer that is falling in 7 years prior to the date of gift. Date of gift is 23rd August 19. 7 year before period is 1,24,000. Right, 7 year before period includes this 13th May 19. So I will reduce the GCT also here, 1,24,000. Now when I reduce it, I get 3,25,000 less 1,24,000. I get here 2,01,000. When I reduce it, now what is the taxable value that I am getting? 336, 250 less 201,000. I get here 135,250 taxable value. Now what you have to do, calculate death IHT. Always write there death IHT, which is at the rate 40%, fixed rate. So this multiplied by 40% is 54,100. Now you know you will be reducing taper relief. So even if it is not there, it is a part of the format that you cannot skip. Now see the date of gift 2019, 23rd August. Date of death is 7th June 24. What is the period? So 3 years will end on 19 and 24 period is 5 years gap. But is it 5 years? Let's check. 4 years will end on 23rd August 2023. And next 1 year will end on 23rd August 2024. This is 7th June 24. So it is falling in between. So my period is 4 to 5 years. Now please check the period. When I see 4 to 5 years, then as per the taper relief, it is 40%, right? So 40% will be reduced. So we will reduce 40% from here. Okay. Now let's, in the question, let's reduce. So 40%. That means taper relief will be 40% of 54,100, which will be 21,640. Now I will reduce IHT. I will write it as lifetime IHT paid. Yes, there was a lifetime IHT paid on the CLT transfer 2250. So please reduce here 2250. I think now it is very clear that we are not paying any double tax. We are just paying additional tax. Now finally you will have IHT payable, and who will be paying it? Payable by who has received the asset? Trust, right? So trustees, the donee. Okay, IHT payable by donee, and which is here 54,100 less 21,640 and less 2250. So we get here 30,210, and this is payable.